Over the weekend, Switzerland's largest bank has agreed to buy its struggling rival Credit Suisse in a deal worth $3.25 billion. Credit Suisse has faced its share of troubles for years, but the stunning end to the institution after 166 years is shaking banking markets around the globe. The two banks could receive more than $280 billion in state and central bank funding as part of the deal, according to the deal's documents reported by Reuters. But Swiss Finance Minister Karin Keller-Sutter insists the move is not a bailout, but a commercial solution, then addressed the concept of too big to fail.
I mean, the too big to fail framework couldn't have been applied here, really, because usually, this is applied to a bank that cannot meet its liabilities anymore. And here we had a problem of liquidity. So it is not typical at all.
She added that a bankruptcy of the nation's second largest bank could have created a contagion effect, causing huge collateral damage. I want to bring in Hal Lambert now. He's the founder of Point Bridge Capital and a former director at Credit Suisse, managing assets in excess of $1 billion. Hal, do you think this buyout is going to calm contagion fears?
No, I don't think it's going to at all. I think it's going to exacerbate it. If you think about what she just said there, it wasn't an inability to meet the liabilities, is a liquidity problem. Well, when you have a liquidity problem, that means you can't meet your liabilities. So, I don't know what she's quite saying there, but it is not going to stem it. In fact, now what you've created is this monstrous bank in Switzerland. And I don't know what they're going to do now that you have UBS and Credit Suisse merged together. You have one institution now that literally could collapse the Swiss economy if it were to have a problem. So this is not the end of things. This is the very beginning of something they're going to have to work through over many years to try to reduce that systemic risk that they now have with one giant bank like UBS. And then, of course, you've got Deutsche Bank, BNP Paribas, some other banks in Europe that are down significantly this morning after this news because, of course, they have their own issues. And I think we're going to have some more banking issues in the United States as well. So this is not solving the problem. It's likely creating more fear out there.
There's a lot to get into, Hal. I want to start with this, though. Credit Suisse has had its fair share of trouble over the past few years. But had SVB not collapsed, do you think that Credit Suisse would still be standing today?
They probably would still be standing at this moment, but they've had, as you just said, they've had problems for years. They've lost billions of dollars in bad decisions. It's really been poorly managed for the last few years. And if you look at what they lost last year, it was $7 billion, over $7 billion last year. So they were already having problems. Would they still be there right now? Probably. I think this created a situation where bank failures in the United States caused European markets to get more nervous. But, I don't know that it meant that they would be here 6 months from now. So the Swiss National Bank should have started much longer time period ago. They should have been on this a couple of years ago and looking for solutions to reduce the risk at Credit Suisse. Because, again, the size of the bank, not from a market cap standpoint, but from an asset standpoint, was very, very large for the country. And so they needed to have been on top of this, working through how to reduce the risk at Credit Suisse probably 2 to 3 years ago, rather than this kind of push over the weekend solution that they're claiming as a market solution, when it's really, we all know, everyone knows that this is a forced merger by the government of Switzerland for UBS to purchase Credit Suisse. UBS did not want to do this deal.
Yeah, we're talking about a real pressure cooker situation when it comes to the banking industry across the globe. Credit Suisse's specific demise seems tied to the annual report that came out last week that declared the bank had material weakness in its financial reporting. And with the sentiment going on with banks, it was just a terrible timing for them. Do you think that there are more institutions out there that have cracks like this that will become casualties of the banking turmoil happening?
Well, sure. I mean, Deutsche Bank is one from a global standpoint that's had trouble for years, that you could almost put in a similar category, meaning they've just had problem after problem like Credit Suisse has. So I don't know whether they have a liquidity problem right now or not, but they're certainly under a lot of pressure. And then if you look at the United States, I mean, there's about 4,000 banks in the United States. So, I read that there's about 200 of those that could have some problems. You've got to figure with that number, you're going to have one or two at least more banks that are going to have similar problems to Silicon Valley. And then what's the Fed going to do? Are they going to let depositors at those banks lose their money and start picking winners and losers at the regional bank level? That's a real problem. That will create a lot of uncertainty around the U.S. system as well. And then they've already picked winners and losers because they made the systemic banks, the large ones, the J.P. Morgans, the Wells Fargos, the Bank of Americas, too big to fail. So people are putting deposits into those banks because of the implicit bailout guarantee that the government has for depositors there. And that's again picking a winner over a regional bank. So it's a real problem that we're trying to do these one-off hodgepodge solutions globally. I think they're going to have to really get it together to stem the lack of trust really that's out there in the marketplace on banks.
Going back specifically to UBS for a second, you mentioned that this was kind of something that they did begrudgingly. They basically got Credit Suisse for pennies. Here's how the chairman plans to rein it in.
Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture.
Hal, what does this tell us about the risk environment we're facing?
Well, yeah, I mean, UBS, not only are they doing that, they got another $100 billion from the Swiss National Bank in kind of a backstop. They've got some additional billions in first losses that the S&B has agreed to take. I believe it was $9 billion there. There's $16 billion of debt that's supposedly going to go to zero. Not sure exactly how that works because debt holders are supposed to be senior to equity holders. But again, this whole thing is being put together by the government and the Swiss National Bank. So I guess they could do what they want to do, which again, though, that creates uncertainty when you start changing the rules of the game effectively to make deals happen. But yeah, I think there's going to be a lot of layoffs. What UBS is going to see is, when you've got a lot of investors have assets at both banks. So then when you combine them, they're going to look out and go, wait, I don't want to have this much at one bank now because I'd already spread my risk out. So I think you're likely to still see asset outflows just from a risk reduction standpoint for investors that don't want to have too much now in one giant bank, meaning UBS.
Yeah. Well, the Swiss finance minister, as we talked about, said that this is a commercial solution, not a bailout. But when you're talking about giving these banks access to funds which are tantamount to a third of Swiss GDP, what's your read on it?
Right. That's the big risk, right? These banks are so large. I mean, you look at Credit Suisse's loan book was probably 3 times the size of Silicon Valley banks. So, it's very large. And then when you look at it on a GDP perspective, as you just said, Switzerland is obviously much smaller than the United States. So it's much harder for Switzerland to absorb this. And let's be real. I mean, banking is Switzerland. I mean, that's their number one economic growth driver. So this is a really bad situation for Switzerland as a whole. Because banking has historically been their main industry. And when you have problems in your main industry, it's kind of like Texas back in the 70s when oil prices collapsed, I guess technically in the early 80s, when oil prices collapsed, it was really bad for Texas because that was a mainstay of their economy. You're looking at a similar situation with banking in Switzerland. So they've really got to try to make sure that this doesn't, there's no contagion to this banking issue with other banks in Switzerland.
Yeah, and this is something else that really perked my ears a little bit. Keller-Sutter said that it didn't qualify under too big to fail because it was a liquidity issue, not a liability issue. But isn't that what a lot of banks are facing right now?
Well, most people don't realize this. Banks are inherently levered 10 to 1. So you take in a deposit and you loan it out in lending. And that's typically done at a 10 to 1 ratio. So all banks have that issue. So if you have a run on deposits, you don't have the liquidity to pay your depositors. And that this is all based on trust and the ability for the depositors to trust that the banks run well and that they're not going to have any loan problems. So perhaps she's right that there wasn't a loan problem necessarily at Credit Suisse. There was certainly a management problem where they were losing and had lost billions of dollars of equity. So when you do that, you make depositors nervous and they start pulling assets out. And that's exactly what happened. They were pulling assets out very large pace that started in the fourth quarter of last year and didn't seem to be abating this year.
Well, this conversation certainly isn't going away. Hal Lambert, founder of Point Bridge Capital and former director at Credit Suisse, thank you so much for giving us your thoughts today.
Thank you.
What sets Straight Arrow News apart from the other guys? Well, for one, we're on a mission to serve you, not an agenda. So for factual, trustworthy reporting, head to straightarrownews.com.